Hey traders, welcome back to next lesson. In this video, the things are gonna get a little bit technical, so please make sure to pay close attention because in this video, we're gonna be talking about the types of candles that are present in supply and demand zones, and understanding these candles will serve as foundations for understanding the supply and demand zones correctly. So in supply and demand zones, there are the candlestick formations that we have to look for, and those candlesticks are rally, base, and drop. Now let's discuss them separately and let's discuss them in detail. So first of all, what is rally candle? Now rally candle, in price action, the rally candle tells us that there is a lot of momentum of buyers, and buyers are coming into the market and they're just pushing the market in the bullish direction. So whenever there is a formation of a rally candle, there will be the bullish trend in the market, and the way to identify a valid rally candle is that it has a very big body. As you can see here, the market opened up here and closes here. So this whole region is the body, and the shadows, as you can see, are very small. So you can identify a rally candle when the candle has a very big body and very small shadows. Let me just go to our chart and show you some of the rally candles that I can spot. So if we go ahead and look here, there are a lot of rally candles on the chart. So for example, here you can see that this is a rally candle because in this candle, there are very small shadows and very large body. And similarly, this candle is a rally candle. However, this candle is not a rally candle because as you can see, the shadows are very big compared to the body. The actual body is just this one here. So in this one, the shadow is bigger. So how do you determine, or how do you specify which candle is a rally candle, and how do you specify if the candle is rally or not? So the way to do that is by defining the body percentage. So if the body percentage of a candle is greater than 60 compared to the overall body of the candle, for example, this is the body percentage, okay, from here to here, this is the body, and this is the full range of the candle. So if this body is greater than 60% of the full range of the candle, then we would say that this is a valid rally candle. And this rally candle, as I said, is the representation of the momentum of buyers. So with the formation of this rally candle, the buyers will be in momentum and they will be pushing the market in the bullish direction. So the next one is the base candle, and in base candle, the market is in retracement phase. And for example, here, first, if there's a formation of this bullish movement with the formation of this rally candle, then this base region would represent the retracement of this rally candle, because after every impulsive wave, there is always a retracement, because market moves in the form of impulsive move, retracement, and impulsive move, retracement until the structure gets broken. So in this case here, whenever there is the formation of rally candle, after that, this type of candle, which has a very small body but very long shadows, will represent the retracement phase. And here you can see that there is the full range of the candle, and this body is very small. So the specifications to identify a valid base candle is the body percentage of this candle will be less than 30% of the overall range of the candle. For example, within this range, you can see that this body is very small. So this is a valid base candle, and this candle represents the cooling off period of the momentum that market faced during a rally or drop candle. So let me just go towards the chart and identify few of the drop base candles that we can see. So let me just go here, and here in this case, as you can see that there are some base candles forming. For example, this candle here is a perfect example of base candle, and this one as well. As you can see that there is this very small body but very long shadows. And similarly, if we look at some other candles, this one here is a valid base candle. Now you might be wondering, well, if there are a lot of rally candles and a lot of base candles, then why are not there a lot of supply and demand zones? The answer to that is because we will only categorize them, or we will only say that this is a supply zone or a demand zone when they form together in a structure that we will be discussing in our upcoming videos. So now let's talk about the last type of candle, that is the drop candle. And in drop candle, the things get opposite to rally candle. So in drop candle, the sellers have momentum and they are driving the market in the bearish direction. So the market moves very impulsively in the bearish direction, and we can identify that by looking at the body percentage of this bearish candle. First of all, the candle must be bearish, and the body percentage of the candle should again be greater than 60% of the overall range of the candle. So as you can see here, the full range of the candle is this, and then there is this very big impulsive bearish movement or bearish body of the candle. So this candle would be categorized as a drop candle. Now in drop candle, as I said, it represents the movement of the buyers in the downward direction. So this represents, at a large time frame, this represents a downward movement in the market or the bearish movement in the market. Now let's go towards the chart and look at few of the examples of the drop candle as well. So if we go here, we can see that there are plenty of examples. For example, this one here is a valid drop candle because the overall body is very big compared to the overall range of the candle. So this is greater than 60%. So this is a valid drop candle. And similarly, this one is a drop candle. This one is a drop candle. This one is not a drop candle because the body percentage of this candle is smaller than 60% compared to the overall range of the candle. So I hope you were able to understand how you can categorize the candles as rally, base, and drop candles. Here again, let me just repeat and go down here. So in order to categorize the rally, base, and drop candles, we have to look at the body percentage. For example, this is the body percentage in case of a rally candle, or if this was a bearish candle, then this would be the body of a drop candle. And then we have to calculate the body percentage. You can use the mathematical formulas as well, or you can just tell by looking at the candle if there's a lot of momentum, and if there is, because as I showed you in the examples earlier, that you can spot the rally, base, and drop candles just by looking at them. So in the next lesson, we're going to combine these candles to form different types of supply and demand zone. See you in the next video.